So back to today, our special guests are Michelle Dale. Michelle is an indirect tax specialist of UHY Haker Young, and Andy Dobson of moneycorp, who will be talking about the losses and gains made through foreign exchange management. Now, I'm going to rattle through these slides because we've got a lot to cover. I don't like to run over, and where are we? Yes, we have a lot to cover. Everybody who's on this course today will receive a copy of the slides, and if you would like more explanation of any of the points, please contact anybody at the Sheffield International Trade Centre afterwards. All of our contact details are on the last slide. So just as a very quick run through, I want to talk about the things which are still causing massive headaches for importers and exporters. And we are still taking numerous calls every day from companies who are running into problems and confusion. And the topics are ranging from import and export declarations. That is still causing issues for companies, although it is quietening down a lot now as people get more and more familiar with what is required. VAT confusion and difficulties, particularly with postponed VAT, that is a constant concern, which is why we felt it would be good to get Michelle on here today. Rules of origin, the trade and cooperation agreement, RECs and invoice statements, continuing issues with that, as is commodity codes, duties, preferences, and then another issue which is which started really from February, but is becoming quite difficult now, is that of quotas, and then the constant old nut is the HMRC and EU compliance. So if we move on to newer issues which are causing problems for companies, and we can chart this because of the types of telephone calls we're getting throughout as the months pass, you know, and some months we have massive inquiries about one particular product, then they slowly fade away and new ones come in. So the newer issues, of course, from the 25th of June, all those companies who use the delayed import procedures according to the border operating model, where they had 175 days to make their full declarations, their supplementary declarations, that comes to a on the 25th of June. And actually we are getting calls from a lot of companies who are saying, oh, we're not too sure if these have been fully declared or not. In some cases, we've had all of these imports coming in, but we've got no paperwork. We don't even know if they were declared at all. So, you know, I do really ask companies to just look at their import profile from January and make sure that they've got all of the correct paperwork required, that the VAT has been paid, and any duties that may have been applied to those particular products, that they've been paid. That is so important. A new issue which is coming up as well is standards and marking. From the 1st of January 2022, the CE mark will no longer be recognised outside the UK, and all companies must adhere to the new UK-CA standards and be UK-CA approved. This is really important. A lot of companies are picking up on this now and starting to focus on their own products and what they need to do to be able to continue to sell them in Europe. As I said, I'm hoping that our next International Trade Live speaker will be from the UK Standards Authority. Quotas, I've mentioned quotas quickly before, but as quotas are exceeding their import allowances, a 25% quota tax is being added onto those products. And And of course, that is crippling. If you've been importing stuff without knowledge that there's a quota attached to it, and then all of a sudden you bring in £10,000 worth of stuff from Europe, and you find that all of a sudden £2,500 has been added to it for import quota, it's going to do a lot of damage. So just keep an eye on that. We can help you with quotas. You can find out from your commodity codes, but it is forming a massive problem. And we're working with a lot of companies, mainly in the steel and metal forming sectors. And we've set up a high-level lobbying committee, which includes members of Liz Truss's office, the Trade Remedies Authority, and we are working in conjunction with the Birmingham and Black Country Chambers of Commerce and the local authorities in both South Yorkshire and Birmingham area to give weight to that lobbying, and we are actually having some success. And then finally, REX and paperwork. REX means registered exporter. By the 1st of January 2022, all EU exporters to the UK will need to be REX registered so that their UK customers can claim preference on the goods. So therefore, there's no duty payable on the goods. For the first 12 months after Brexit, from January 21 to 31st December, December 21, the EU and UK agreed that they would not be too heavy on origin and preferences. We can claim preference by putting a statement on our commercial invoices, as long as our EORI number is on it. But the Europeans from 1st of January 2022 are going to have an REX authorization number. So what can SITC do to flatten the bumps? Well, if you are concerned that you need to do full declarations from the 25th of June, that says the 1st of July, but actually it should be the 25th of June. We can help you with that, but we need to get on with it now because we have to try and find all the original paperwork so that we can do those full declarations on your behalf. Another new thing that has literally just started with us, we've been on training courses, we've set up the systems, we can now issue transit documents, which is going to be a big positive for many of our members and clients. And we are now fully set up to work on the new customs declaration system, which is another development. Also, SITC are managing the DIT Internationalisation Fund. This is the European Development Fund, of which DIT have asked Sheffield Chamber to distribute, I should say DIT Yorkshire. And on these slides there, you can click on that point. When you receive this presentation, you can click on that to go to the application page. We are doing customs compliance audits. This is very, very busy. We're doing audits several a week for companies who are just wanting to make sure that they're going down the right route, the correct route, and they are using all of the authorizations that they can to enable them to save money and even to make money. And finally, we do have the consultancy service, whereby we can cover things such as the UKCA marking, quotas, duties, VAT, customs authorizations, and the audits. So that's where we're at. So I'm going to move on now to our first special guest, who is Michelle. And I'm sure that many of you might be wanting to ask questions. You can ask questions through the chat box. If you're feeling like you want to speak, then please put your hand up and we'll try and get to you to pose your question on air. If we don't get through all the questions, we will make sure that we've noted all the questions in the chat box and get back to you afterwards. And to that end, both Michelle and Andy, well, actually, and myself, prefer to call you. So we will probably be in touch by email. And if you're happy with that, then I will share those email addresses with Andy and Michelle. If not, then please do it through me, and you can send me an email. So moving on to the next one, I'd just like to introduce you to Michelle Dale. That's her bio. It's on the website. And now I am going to hand over to Michelle. I'm going to stop sharing my screen and let Michelle talk to you. Thank you, Michelle.
Thank you. So can everyone see that? Can you see that, Nick?
Yes, we can. Perfect. Thanks, Michelle. It's perfect.
Wonderful. Thank you. Thanks for the handover, Nick. A Brexit story. Oh, they're not moving. 1 second. Oh, 1 minute. Oh, here we go. Yeah, a Brexit story. It's been a bit of a rough ride this year for many businesses that are exporting and importing in from the EU and out to the EU. Bit of an intro for myself. I've got over 20 years experience in VAT, 17 of which have been here at UHY. The other 3 were at HMRC. 2021 has been the year where I've become an expert in EU VAT and the movement of goods in and from them countries. In this presentation, I'm just going to cover a little bit about what it was before, what happened on the 1st of Jan. I'm going to briefly cover the movement of goods B2B, and I'm going to focus on the B2C because they're the ones where we've got new rules coming in a couple of weeks' time, and this is one where we've got the new schemes in place. So pre-Brexit, as you know, everything was hunky-dory, as I would call it, no trade barriers. You could move goods in and out of the EU with no payment of VAT or customs duties, no border formalities, no import and export declarations, and we have the use of the EU simplifications, your triangulation, which was probably the most common, and your EU call-off stock. Then the 1st of January came, and we had the joyous Trading Cooperation Agreement, which is 1,000 pages long, and that detailed all the new rules that were to be implemented from the 1st of January for the movement of the goods from the UK into the EU. There was a new partnership formed, which is co-chaired by the European Commission and the UK government. And the aim of this partnership is to oversee the implementation and the management of the Trading Cooperation Agreement. I'm not sure that much of this has been done yet because of other things that have been happening, which COVID and things like that. The TCA said that there will be no tariffs or quotas on certain transactions, and those certain transactions were basically the ones where the rules of origin were met. So where suppliers could evidence that the goods originated within the UK or the EU, they would continue to be able to move freely between the UK and the EU without paying import duty. And the movement of all goods between the UK and any other country now require a customs declaration, formal declaration at the border. This is just a little fact that I found when I've been doing my research over the months. 240,000 UK businesses they think are going to be affected by the new rules, and 200,000 EU businesses, with around 2 million declarations being submitted just in 2021. So there's quite a significant amount of businesses that have been affected by these new rules. So looking at the B2B, the movement of goods, I'm sure a lot of businesses now are fully fledged with all of this. It was rusty at first, but things are getting going now. I seem to be getting less questions on this, unless things creep out of the woodwork, but things do seem to be moving. So when exporting goods into the EU B2B, No UK VAT is chargeable, providing the conditions are met. So there's been no changes to this. So as long as we've got proof of export and the goods go within the specified time limit, no UK VAT is chargeable. If the rules of origin are met, there is no import duty due on arrival into the customer's country. If the rules of origin are not met, then import duty will be due in the country when the goods arrive, and this can range from 0% right up to 25%, I think one of the highest rates is. The import VAT is payable by the importer of record, and the import duty is due. The import duty is payable by the buyer if the goods are going DAP, and by the seller if the goods are going DDP. Now, where the goods go DDP, the UK seller is likely to have a registration requirement in that country. And the reason for that is the seller is clearing goods into that country, and as a result, they own goods there, and therefore the onward supply to their customer is a domestic supply, which means that they have a requirement to register for VAT there and charge local VAT on that transaction. And I just put this last point in because the local rules do vary from country to country. So an example of this is Spain, France, Belgium and the Netherlands. They all use a reverse charge. So if we look at a transaction chain where we've got a UK to a Spanish customer, B2B, let's say, the onward sale, so you're clearing the goods in DDP, which means the UK seller is responsible for clearing them goods in and paying the duty and the VAT if they're the importer of record. The onward supply to the Spanish customer would not be subject to the Spanish rate of VAT, but would be subject to the reverse charge. So that's just something for you to bear in mind with them 4 countries. Moving on to B2C transactions. So this is just a little case study that I've included to show how businesses have traded since the 1st of Jan from a B2C perspective, sorry. And it's been difficult. There's been a lot of businesses that have withdrawn B2C trade with the EU. B2C trade, sorry, because of the implications and the complications. But as we all know, there's a lot of change from the 1st of July. So in this case study, we've got very plain name here, ABC Limited, selling clothing, B2C to a customer in the EU. At the time I wrote this, it was London Fashion Week, and Paris Fashion Week, it was chaos with the movement of good clothing going all over. So prior to the 1st of January, the distance selling rules would apply. Your EU customer would purchase their dress from the UK supplier, and these goods would just go, 20% VAT would be charged, the customer would receive the dress, and that would be it. End of story. UK that chargeable on the transaction, and everyone's happy. So after the 1st of January, this changed. So because it's now deemed as an export, there is no UK VAT charged on the transaction. The carrier, who is, so your DHL, your UPS, they were completing the export declaration. When the goods arrive at the country that they're going to, import VAT and duty is now due on them goods that arrive there. The import agent completes the import declaration, and then the customer gets a phone call or an email to say, here we have your parcel from ABC Limited, but you have to pay X amount before we can give you this, and this is made up of X amount of duty, VAT, and your charges for us completing the import declaration. So then what happened? We had a series of customers, they were complaining, refusing to pay the charges, trying to send the goods back. And when the customer did send the goods back, that created an issue at the UK, in the UK, because when the goods came back, the same happened again. The seller was then charged import VAT and duty when the goods came back. We had a couple of businesses that just completely cut off all EU B2C trade because they just couldn't facilitate it. We had a couple of businesses that decided to change the shipping terms to DDP, so they would take the transaction onshore, charge VAT at the rates in that country, register for VAT there in order to continue to trade with those businesses. And then how that worked was they paid the import VAT and duty, they claimed back the import VAT and charged the customer the VAT in that country. And these two guys on here, these are the guys that help the majority of our businesses register for VAT in the Netherlands and help to get the flow of goods moving again. These head up our VAT team at our Dutch office, Govers. So moving on to the new rules that come into effect on the 1st of July. These are just some points that I went over in the case study. Just to reiterate, there was a downturn in trade, unhappy customers, inundated returns. So these new rules are now to help facilitate B2C transactions all over the EU with effect from the 1st of July. They're going to be split into two sections. There's going to be transactions less than £135 or €150, and these will be facilitated by the import one-stop shop. And then for the larger transactions, these will be facilitated by the one-stop shop. Two separate registrations. So looking at the import one-stop shop, or the IOSS, first of all, for the smaller transactions, this is where the goods will be continued to be sent from the UK. There will be an EU foreign trader VAT registration required. And in addition to that, you will need an IOSS registration. VAT is chargeable by the seller at the rate applicable in the customer's country. So for all the online platforms, the online sellers, their technology, when the customer fills in their country field, that will detect the VAT applicable in that country, and VAT at that rate will be charged. The goods will travel from the UK to the destination country, along with the IOSS registration number on all of their import-export docs, and that will enable the goods to go and enter that country without paying any VAT or duty in those countries. It will be a monthly VAT return that will be submitted via a portal, and that VAT return will be, or that IOSS return will be submitted in the country where we've got the EU foreign trader VAT registration. And there'll just be one payment every month to that tax authority, and then that tax authority will distribute that out then to the countries. I have seen a template of an IOSS VAT return, and literally you list the country, the amount of sales, the rate of VAT, and the amount of VAT that's being charged, and then it's all uploaded onto the portal. Moving on to the one-stop shop, so this is for the larger transactions. So again, the UK business must register in an EU country to use this simplification. The OSS registration is in addition to that VAT registration. So again, we've got two registrations. With the OSS, we have got a calendar quarter VAT return with one payment a quarter, and again, just one payment, and that is all distributed to the EU countries concerned by the country where we're VAT registered. With this, the goods have to be routed through the country where you're VAT registered. So a lot of the carriers now you'll see have got routes into Germany, road routes into Germany, road routes into the Netherlands, where UK businesses have chosen to register, then they can take advantage of the one-stop shop. UK businesses, for the OSS, there's a union scheme, which is just for the EU, and then there's a non-union scheme. So all UK businesses will be using the non-union scheme. I just wanted to mention as well that last point, that the OSS also covers the supply of some services, which we're not going to cover in this because it moves on to use and enjoyment and things, and we don't have time, but it covers some services where the place of supply is in the EU. Just a couple of warnings on the new simplifications. If we don't use these, the UK suppliers will either have to register for VAT in every member state where they're sending goods to, or ship the goods DAP, and the customer will have to pay the import VAT and duty, which I think over time will result in a loss to the sales. And then my final point on the simplifications is that the rules for these are strict. The EU Commission have said that payments and returns, they must be submitted on time, and two instances of lateness will result of the UK businesses being thrown out, unable to use a simplification, and they would be thrown out for a period of 2 years. So I just wanted to make you aware that there are some compliance rules there that need to be adhered to. And by the looks of things, they're reasonable. They're not going down the reasonable excuse like HMRC do. There's none of that. It's literally 2 strikes and then you're out. There we go. That was a very quick whistle-stop tour through the new rules. Thank you.
Thank you very much for that, Michelle. It is very, very interesting. And there are a lot of really important things that companies must be aware of, particularly with VAT. It's something that EU and UK customs are particularly hot on. They make money. So it's really important to understand your responsibilities on that particular point. We'll be answering questions after the next presentation. And just to put my screen up again, to move on to the next slide and introduce, we're going to now talk about foreign exchange and payment solutions. And, you know, I'm sure we're all very, very familiar with the huge amount, you know, the tens of thousands of pounds that can be lost or gained by bad FX management. And so Andy Dobson, who's head of sales at MoneyCorp, to come along and give us a little bit of insight into what's happening in the current movement. We're living in a very, very volatile world at the moment. There are so many things coming into play. So Andy, I'm going to move on to you. And if you would like to share your screen, I'm going to stop sharing mine now.
Right, okay. Can everybody see this and my cursor moving around? I've got the right screen shared then.
Yes, you have, Andy. Yeah, we can see that and we can hear you.
Okay, well, just a second. Let me. Right. Okay. Look, I'd like to thank Nick and the Sheffield International Trade Team for inviting me onto today's webinar. And what I wanted to do was just give a short presentation and an overview of 2020 and an insight into 2021. As the slide that Nick displayed showed, I've spent coming up to 30 years in the currency world. The majority of that was spent with HSBC, and I've been there to help many businesses from SME, MME, large corporates manage their currency risk. What we can see here is really just a timeline of what happened through 2020. Certainly a notable year, and we really went into the year expecting Brexit to be the focus and deal or no deal. But very quickly, coronavirus and COVID took over and we had lockdown 1 and 2. Bank of England cut base rates to all-time low of 0.1%, and the coronavirus pandemic took hold globally. US unemployment rose to a record high of 14.7% back in April, and sterling dropped to its lowest level in 25 years against the dollar. We were at $1.15 to the pound. Recovered slightly by the summer back to around the Brexit levels of 1.34. We saw the ECB struggling to agree a recovery package for Europe, and then later on, the EU actually began legal action with the UK over the controversial bill by Boris Johnson to override the Brexit agreement. They cited that as breaking international law. And then towards the back end of the year, the US election started to dominate. So we had a kind of a perfect storm in the foreign exchange world. We had a lot of events happening, and we moved on to the US election. Fallout from the US election started to impact on exchange rates. There was a bit of a spat that you probably all remember, Biden and Trump. Trump really not wanting to relinquish power. And then start of 2021, lockdown 3. This was followed by supply chain issues as well. Shipping containers stuck in the Suez Canal, container prices rising from $1,500 per container up to $20,000 per container. The anecdotal evidence that I've had, I think somewhere around $12,000 at the moment, having dropped back to 8,000, but still causing supply chain challenges. In the UK, we had a lot of focus on the vaccination and how well our programme was being rolled out. And again, that had its impact on the value of the pound, looking at the implications and positive momentum for the UK economy. Where we are now, markets seem to be moving away from the global vaccination programme. That seems to be certainly in the Western world, being rolled out at pace. We now seem to be looking back to more economic fundamentals. And last week, the US FOMC meeting, we had 13 members talking about 2 rate rises before the end of 2023. The US have already got higher interest rates than the UK, and that increased yield has caused the dollar to turn around and strengthen again. We moved from 142 to 138 within a couple of days last week. UK inflation is now taking centre stage as well. Inflation at 2.1%. We've got the Bank of England meeting tomorrow. How's that going to play out? Are they going to start talking about higher rates in the UK? And again, how will that play out for sterling? Just a couple of charts here really to show what's happened since lockdown 2020. Sterling dropped from the start of the year against the dollar from about 134, and as you can see, following lockdown, we fell down to around about 120, 121 pretty quickly. But since the rollout of the vaccination and the UK doing well there, we started to see a good appreciation in the pound, and it's moved from 121 to 142 over the course of the last 12 months. Similar story with the euro, albeit we're not moving quite as much. We seem to be stuck in a little bit of a range, and that's more than likely due to the UK and Europe still fighting through some Brexit terms. What I wanted to do here was really just highlight some of the impact of sterling moving and put that into kind of pounds, shillings, and pence, if you like. And what I've done is just look at the Q4 2020 and how much the pound has moved against the US dollar and the euro. Those are the major currency pairs that we see dealt. But as you can see on the slide there, a 9% movement, 137, 126.50, that can have a significant impact on a business, whether you're importing or exporting. And based on just a $500,000 transaction, that can be positive or negative to your business of over £30,000. Similar story with the euro, a more than £20,000 difference on €500,000 in Q4 last year. This isn't unusual. We see market moves like this all the time. And if we just go back to Brexit back in 2016, sterling dropped around 20 cents within a couple of days against the dollar. Never mind 3 months, that happened within 2 days. And by the end of the year or through the year, we'd moved 30 cents against the US dollar. So again, it highlights the significant volatility that we see in the market. But what can you do about this? Firstly, you could talk to moneycorp. We're in partnership with the Sheffield Chamber, and we're here to help clients and members manage their currency risk, as well as providing an alternative choice to your current provider. The map here just really highlights, it was just aimed to, or here to highlight that moneycorp are not a small business, we are a global business, yeah, with the UK's largest foreign exchange broker, and we've been around since 1979 in the UK. So we're not just a new kid on the block, we have some experience. Just a little bit about what the industry says about us here. We're recognised for outstanding customer service, for our cross-border payments, and being able to tailor products and services to meet all of our clients' needs. We have a dedicated online payment and FX platform, simple to use, and it's been developed with our corporate clients in mind. It's not an institutional platform that's been tailored, that's been tweaked for corporates to use. Why moneycorp? Well, quite simply, it's easy to open an account with us. There are no costs involved in it. We have expert help and guidance, ease of reconciliation with all your transactions. There are no fees deducted for paying or receiving funds from your beneficiary. And above all, it's good to have an alternative choice if you only have one provider at the moment. We can also provide a full range of products and services to manage each individual business need. What can we do for you? We'll provide you with a dedicated account manager, direct access to our dealing team, as well as access to an online platform. We'll give you both choices. You can use either or, and the rates will be the same, whether it by phone or by online platform. We're an FCA regulated business, and this means that we can provide a wide range of products, spot, forward, and currency options. Why deal with moneycorp? Again, most businesses go directly to their bank and get one exchange rate from their banking provider. moneycorp have a panel of 18 banks, and this slide just really highlights that all of our banks are effectively bidding for our business. It's a bit like the Go Compare of the foreign exchange world. You come to us for a foreign exchange rate, all of our banks price that, and the leading price comes to the front and is given to yourself as a client. Incidentally, none of our banks know who our clients are. Any transaction is directly between the client and moneycorp. What can we provide our clients? We actually provide you with one account, but within that one account, there is a multi-currency wallet. So all of our clients have access to free virtual currency accounts, sterling, dollar, euro, Japanese yen, Swiss franc, etc. You have access to them. That makes it very easy to manage all of the funds that you hold with moneycorp and transfer between one account and another, or one currency and another currency. All transactions can be done online or at the telephone, whichever your preference. And that's really it from me. Just a whirlwind tour of what happened through 2020, a little bit about currency volatility, potential impacts on profitability, margin, etc. Any questions, I'm more than happy to answer those either today or speak to you later. Thank you very much.
Thank you very much, Andy. And a fascinating invite. If you could stop sharing your screen, thank you very much. I am just going to put my screen up again, and we're going to come to the next slide, which is really answering a few questions. So we do have some questions in the box, if I can find them. I've lost the seems to have lost the questions. Yulia, can you see the questions?
Yes.
Did you mind reading them out?
Yes, no problem. So I've got the first question from Karen. And she is asking, under DDP, where the UK exporter can have EU registration, is one registration in the EU sufficient? And how does the importer of record work if the exporter doesn't have an actual address in that country? So that will be the question to Michelle. And do you mind answering it, please,
No,
for
that's
Karen?
fine. So are we talking B2B, I presume? I'll go on the route that we're doing the B2B. So if
I think we are talking B2B here, Michelle. Yeah.
Yeah. So if we have got goods going DDP, you would have a registration in one country. So the goods would go to that country, they would clear into that country, and then the onward movement of them goods would be intra-community transactions and zero rated on from your EU VAT registration. With regards to the actual address, this is where fiscal rep comes in, fiscal representation. Some countries require it, others don't. So for example, if we have it the other way around, the UK, HMRC don't require fiscal representation, but UHY, we act as a tax agent on behalf of overseas businesses. The tax agent isn't jointly and severally liable for the tax administration in the UK. It's like I said, fiscal rep isn't required in every country, but it's like Spain, for example, you have to have it there. So you don't for that process to work, you don't actually have to have a physical address.
Yeah, thank you, Michelle. Karen is asking, could that registration be that of a logistics company rather than an actual exporter? If you want to unmute yourself, Karen, you're more than welcome.
So, go on, I've not read that.
Thank you. So yes, I run a logistics company in Chesterfield. So we're obviously being asked increasingly about how we can assist people with DDP terms and how they can account for their VAT.
Right.
So one of the thought processes I was thinking, Michelle, that if the logistics company could hold representation and work it out that way to make it simpler.
Right. So I think with that, Karen, I think you're treading on dangerous waters with that, because you will be then declaring somebody else's goods in that country and paying the import VAT for somebody else, and you can't reclaim VAT that doesn't on goods that don't belong to you. Okay. I know people are looking for shortcuts, but I don't think there are any. And I do know that some of the big carriers initially did that, exactly what you're talking about, and that's all been withdrawn now, because your customer needs to be, your UK sender needs to be in a position where they can reclaim any charges in that country. So let's say even if you paid the charges and then claim them back, you would still have to then charge them onto them, and they wouldn't be able to. Does that make sense?
It does, thank you. I mean, I kind of got that would be the answer, but I thought it was worth asking the question because, like I say, it's a common problem for exporters. So I was kind of looking if there was something that perhaps we could do to simplify it. But if that's the case, that's the case.
The bigger ones did try that initially, but it didn't work. I mean, so have you got direct road routes into? Are you doing direct road routes into, say, the Netherlands now?
Yes, we are.
Yeah. Maybe we'll pick it up offline, Karen. Got loads of contacts there that can help you get that. Get you know your clients in the right direction to make things run smoothly. Because we've got loads of clients now. At the end of the day, you've got the road route in for them. You can sort that bit for them. They just have to do the end bit themselves.
Yeah, lovely. Sounds good if we pick up outside of this webinar.
Yeah, drop me a line, Karen. Drop me a line and we'll sort it out.
Will do. Thanks, Michelle.
No probs.
Yeah. So just to go on to that one, through UHY, we can help you set up a representation in the Netherlands, and for what is a very, very little cost, certainly compared to other European countries, set up a VAT registration, and all of the VAT submissions can be done through your virtual Dutch company. And as Michelle says, anybody who's interested in finding out more about that, please pick it up with us.
To be honest, Nick,
pass you on to
it's not even, I wouldn't go so far as to say a virtual Dutch company. It's a foreign VAT registration. So it's just ABC Limited registered for VAT in the Netherlands. So there's not a separate entity. You've not got a whole load of costs for a separate entity. It's literally the UK company registered for VAT in that country.
Even more exciting, Michelle.
Oh dear.
Okay, so Yulia, do you want the chat now? So do you want to keep asking questions, or shall I? You do it. You're good at it.
Thanks, Nick. So Donna has another question for Michelle, please. So under DAP, Incoterms, selling from UK to customer in the EU for goods over £135, does the customer remain the importer of record? Therefore, where the seller do not need to charge VAT?
So if you're sending goods into the EU, DAP, and I presume this is a B2C, it is the customer's responsibility to clear those goods. So we've got an export scenario from the UK. So we've got a 0 rated for VAT sale in the UK, but when the goods arrive in France, let's say, they'll be subject to import VAT and duty.
Okay. Thank you very much for your answer. The next one is regarding Incoterms CFR and CIF, sorry. Would any VAT be due?
Yeah, I've not seen much of these terms, to be honest, but I think for both of them, it's the buyer's responsibility at the other end. So
Just
I think...
Sorry, Michelle, yeah, just to elaborate on that, both CFR and CIF mean that the buyer is responsible for clearing the goods in the country of destination. Abdul does talk about is required to register for VAT in EU for these terms. Usually Incoterms or movement of goods to Europe take place by truck, sometimes by air. These tend to be shipping terms, but nevertheless, if goods are going by ship, then it's the buyer who must clear the goods. So no VAT required.
I don't think in that scenario the UK seller's got any responsibility if they're not the importer of record on the other side.
Yeah, correct.
Thank you very much.
Okay, Yulia, next one.
Well, we do have a question for Andy. Where is MoneyCorp's margin? So if you could please explain this a little bit.
Okay, so,
question.
Yeah, it's an interesting question, but our margin is bespoke for each individual client that we deal with, depending on their requirements, depending on the currency pair that they're looking at. Is it an exotic currency pair? Is it a G7 currency pair? But we would happily compare our rates to any business at any time. And that's the true test, really, is having that upfront conversation with us. In the majority of cases, you will find that our margin is better than your bank, for example. We don't need to achieve the minimum return that banks are looking to achieve. Yeah, so we have lower cost aspirations than banks do.
Thank you very much, Andy, for your answer. The next one, back to Michelle. Jenny just wants to clarify on B2B basis. If you're selling goods into Southern Ireland or Spain, no distributors under DAP, would we then need to register for that in each country? Once we have sold the goods into the country that is the end of that transaction for us. So basically, once sold to that initial recipient, we don't then make any further profit.
Right, so we have got goods going into an EU country under DAP. Would we need to register for VAT in each country? DAP means your customer's responsible for clearing them, not you. So they will have to pay the import VAT and duty when the goods arrive. Does that help? Have I answered that one? So basically, once sold, the initial recipient. So the distributor is a separate entity, I presume.
Here, a distributor is not necessarily the buyer, final buyer, but they might buy the goods from, they will buy the goods from the supplier company in the UK. So it's a standard sale. If the goods are sold at DAP, the distributor is responsible for clearing the goods into Southern Ireland, and they're responsible for paying the VAT in this case.
What we've found with, especially with Southern Ireland, I don't know if you've come across this yet, Jenny, but the Southern Irish businesses won't trade on DAP. Well, a lot of EU companies won't trade on DAP Incoterms anymore. They're insisting on DDP. And the DDP is the bit that gives you the headache, because that gives you the responsibility then to take your transaction onshore with a view to possibly having to register for VAT in that country.
Michelle, I'd just like to qualify that, because while that is true in a lot of cases, I don't think it's true in the majority. I think a lot of companies are happy to buy on DAP. However, it is a fact. And if you have got customers who refuse to buy DAP and they want DDP, then you have got no choice but to get set up with a VAT number in Europe.
Maybe, Nick, the only reason why it's obviously landed on my desk is because the customer has said we won't do DAP. So if they've said, yeah, we'll do DAP, there's no issue, is there? So it's landed on my desk because they've got the issue that they're enforcing DDP Incoterms only. Yeah,
well, that is absolutely true, because you wouldn't hear about the DAP ones. Wouldn't be that much. Look, I'm going to have to stop the questions there. Time's moving on, but I absolutely promise we've got loads of questions in the chat box, but I absolutely promise that we'll get back to them all. And we will be looking at that today once this is finished. So thank you very much, both Michelle and Andy. I also did have a lot of pre-answered questions, pre-presentation questions, which I haven't had a chance to get to, but I will be getting those. We will be answering those by email or telephone as well. So just to finish off, I want to try to avoid running over if possible, but just a few more things I'd like to cover. And that is, so how can SITC help with companies who are coming across problems in with their international trade? And this doesn't have to be just to Europe. Obviously, it's a global issue. But on this slide, I just list all of the different aspects that we're helping to cover. And when you receive this presentation, if you click on any of those, it'll take you to the correct point on our website. Clearly, obviously, we are a membership organisation, all chambers across the UK, in fact, across the world, because we are represented. We've got people on the ground in over 70 countries around the world. We are all not for profit, but private business groups, and we're a membership organisation. So if any of you out there are not members and you want to find out about it, there's the slide for that. We do have some more upcoming trade events coming up. On the 22nd of July, we're talking about crossing continents and moving goods under transit. And on the 9th of September, we've got the tariff-free trade. And both these are British Chambers of Commerce webinars that we are promoting and inviting people to come to. They are free. And as I already mentioned, it's not up on our website yet, but the next International Trade Live event, we will be covering customs procedures and compliance. And I'm hoping to get Becky Stark in on that one. She is one of our trainers. And also, we're going to be focusing on UK-CA and standards, because that is another issue that is going to hit most companies by January, and you need to start thinking about it now, because it will take you several months to get all your products registered under UK-CA. And as I say, I'm hoping to get somebody from the Standards Authority on that particular one. So keep an eye on our website and social media. So that's it. We're just about 1 minute to 11. So I think we've done we've covered a huge amount. If anybody does want follow-up discussions, then on this last slide that you will receive, it's got the people involved in international trade here at Sheffield Chamber. Those are our email addresses. For any questions that you want to ask of Andy or Michelle, if you could pose the questions to me by email or telephone, then I will make sure that Andy or Michelle get back to you directly. And really, I think that's about it. The second hand has just gone past the 12. I think we've done pretty well. Would you like to say any more, Michelle or Andy, just to sign off with?
No, thanks, I'm fine. Just get in touch if you've got any questions.
Okay, thank you very much, Michelle, for your input. It has really been interesting. Andy?
Same for me, just thank you to Nick and the team. And if anybody's got any questions, my details will be on the slide deck that Nick sends out. Indeed.
All right. Thank you very much, everybody. And thank you for joining in this webinar today. Thank you, Yulia, as well, for just making sure I'm off the rails. All right. Bye-bye.